Good afternoon, traders. Welcome to this week's Midweek Market Focus. Today is Wednesday, the 21st of November, 2012. I'm your presenter, Adam Harris. The time right now is 24 minutes past 1, so it's in the middle of the afternoon. And what I'm going to be doing is taking you through a number of different setups. First of all, I wanted to just extend a warm welcome to our new graduates. Obviously, every week we have new people that are joining us who have completed a stocks or a currency course. And so I wanted to just introduce you and just to the new graduate website. This is something that's a standard thing. Just direct you to that. If you're not familiar with it, this is a website where you can obviously define your profile as one of our delegates, and where you can access software that you can then download. And also there's a link there through to the Midweek Market Focus. What I'm going to do today is we're going to have a look at the market overview in general. We're going to look at both the stock indices, a couple of individual stocks, and we're going to look at the currency market as well. And then I want to discuss the concept of a stop loss and a profit target, the whole idea around that. And we'll have a look at a few longer term opportunities, and then I'll wrap up with that. So without any more further ado, let's just head over and have a look at, let's just first of all begin by having a look at the stock markets at the moment. And so what I'm going to do is have a look at the stock indices and just have a look at why the data is now not uploading. There we go. So the main thing that I want you to take away from this is we're looking at obviously the summary of the top 100 companies listed on the FTSE Stock Exchange. And just be aware that the cycles are a lot more volatile and a lot shorter. So we've got a couple of days up, followed by pullback. So it's just become very, very difficult for people to trade this. And not only that, what we've actually happened is we had a bit of a consolidation period here, and price has actually broken down, come down to a key level, and looks as though it's currently bouncing up. But there's a number of things that are quite significant here. The one is that the market itself has, first of all, broken the previous low, and it's generally indicative of a bit of a range. If we jump up to a higher time frame, the weekly chart, what you'll note is that we're really just ping-ponging around at the moment, and we're sort of stuck on this level. The market is, believe it or not, the market actually does want to go higher. It really does want to, but it's really struggling to break through to new ground. So that's what's going on here at the moment, is it's refusing to come down low. It may ultimately have to, but it really doesn't want to. It actually wants to take another run at breaking its way out through this trend. And as I pull further back, you'll understand where that particular line has come from. So just be aware that some of the what you obviously want to do is stay away from individual stocks that are acting a bit crazy like this. So if we jump across to, let's just say, our power play layout, really your goal is going to be to avoid anything that is following the FTSE itself too closely, because obviously what you're trying to do is to establish, with the secret with trading is always about the quality of the chart. So, we're not looking to trade something per se that looks like this. What we are seeing, which appears to be on the daily time frame, is we have started to produce lower highs and lower lows. So we are, off the top of your head, you'd probably be looking to short a few stocks, but if you look at the much longer term thing, we're actually looking to be going long. So we're going through a bit of a turbulence at the moment. The reason for that is turbulence in general with some of the companies, but also people can trade the stock indice itself independently, and so therefore they actually add volatility to this that is individual and separate from the stocks that are listed in it. So just be aware of that. And so I want you to just be aware of paying attention to what I'm going to refer to going forward as sort of A-class stocks. We're really looking to see things that we can clearly identify cycles. That is the key. There's a number of things that are significant about this chart. You'll see that below here I have a weekly chart. I've got a weekly chart here so I can assess the quality of this particular stock over a much longer period of time. And so there's a couple of things you'll obviously be wanting to know if you're a beginner trader. First of all, is how do I go about adding a weekly chart? So very, very briefly, you'll find that under New Advanced Chart, Default Chart. So under New Advanced Chart, Default Chart, once you click on that, you'll be provided with a brand new chart. And the key thing that you'll want to be doing at that point is, first of all, is making it a weekly. So one of the ways we can do that is, I think we have under other intervals, I think we can choose weekly. which provides me with a weekly chart. And then, of course, I also want to connect it to the particular stock that I'm looking at. And you'll notice that there's a color on this particular window, on these windows, which is blue, and currently mine is linked to green. So what I want to do is change that color to blue. And what you'll then find is as I change my stocks over here, anything that I do, just go here, change my constituency list, and select, and you'll see that they now update. So this is now a weekly version of this particular stock, and then obviously what you can do then is you can then resize it and place it where you need to be. That'll get you going for the most part, allow you to at least analyze that. But really what I'm concerned about, I'm just going to get rid of this, what I'm concerned about predominantly is identifying the trend in the cycles. For example, this chart that I happen to be on right now is going sideways. So regardless of the fact that it might be telling you, for example, it may say to you there's a trade setup, there just is nothing worth trading here. You're not going to make money here. You'll make it, lose it, make it, lose it. And you're just gambling at that point. So what we're really looking to do is to identify charts that historically have a relatively good chance of going at least in the direction we anticipate. And so therefore we want to be looking for opportunities to trade those cycles. And that's really worth your while to pay attention to the individual stocks. That's really the secret to it. Jumping through a few of these things, we have some that have really good, strong, healthy trends. The angle is important, and obviously that ability to identify cycles, and paying attention to support and resistance. But historically, this one's looking really, really good. And then we can look at a few others. This one is just too volatile. So although it's trending upwards, it's doing it on such a volatile basis that it is incredibly difficult to trade profitably. So for beginner traders, don't do that. Don't trade it. I know it's going up, or trade it, but at least be aware that it's highly volatile. Okay, so there's a number of different things here. So mainly this is going sideways. We can't trade this. I don't really care whether the scanner tells you there's a trade set up here. I don't want you to trade it because it's too volatile. All right, so really we have to protect ourselves when we do that. So it's really worth your while to jump through a couple of these and have a look. But I would say right now the darlings of it are some of the food companies. There's a number of these that are climbing up relatively nicely. Diageo is currently the darling of the whole thing. It's very, very consistent, very nice. At some point you'll notice here that it tends to bounce on these moving averages. I'm using the 50 in red and the 20 moving average on my weekly chart and also my daily. I have my 200 and my 50 and my 20. And I really use that because when it's trending, those are the ones that it likes to interact with. And similarly, the 20 in this chart is often very close to the 50 in this particular chart. So it's just a time frame difference. But I want you to notice that we often be going through cycles on the weekly, and the weekly is fully entitled to cycle. So at some point in the future, we will be pulling back on a bit further back because we need to pull back and breathe a bit on the weekly time frame. But until then, we just continue to take these trades as they occur. The other thing I'd like you to be aware of, I think it was in the last Midweek Market Focus, we spoke about the fact that Diageo was hitting up against resistance here, and it has now broken out, so it's looking really good. So for those of you who are looking for trading opportunities here, what we need is the patience to wait for it to come back to test that, which will be over the next week or two, maybe even over the next few days, come back to test it. We're looking for an opportunity. It may come down a bit under that level, maybe it'll come down to the 50, and so you'll be looking for opportunities to trade that. And then obviously the idea is to take it long. And because it's broken through this level, the good news is hopefully that now that that level's been broken, we shouldn't find that resistance again. And so we can take those trades long. So really, I'm just pointing out today is just the whole idea, the concept of quality when we have a look at these different things. Okay, so I'm going to jump across to my normal page, which is just where I can do the overall analysis. And what I want you to be aware of is we're just going to be having a look at where we are now. We have pulled back to support. Let's put on these moving averages. Let's put on my 20 if you want, 20, 10, and 50. And just have a look at where price is at the moment. You can see it's sitting here on the 20. It's pulling back, but we've got them in the right order. So we've still got the 200, then the 50, the 20, and the 10, which is still relatively bullish. We've pulled back. We haven't broken the previous high. We are struggling here a bit. So the real question is, can the FTSE succeed in doing this? Well, let's have a look at a few of the others. We've got the S&P in the States. That's done some of the thing that has broken to a brand new high. It looks a lot healthier than the FTSE. And it's pulled back here to a support level, very crisp, reversed, and that is now bouncing off the 50 is looking to go long. And we'll talk a little bit more about the opportunities of trading that are coming up. But basically, that's still looking particularly bullish. Then if I look at the Dow Jones, exactly the same thing, producing high lows, high highs, has come back, found support, potentially reversing here. And is looking to continue its upward cycle at this point in time, is looking to do that. We've got the NASDAQ. NASDAQ is the same thing. It is producing higher lows, high highs. I am, however, looking at the particular shape of the cycle, this is a worrying effect. This is potentially a prelude to a downturn. Why? Well, because first of all, a healthy uptrend will do a longer move up and a tighter move down. When it starts doing this, it's not necessarily committed to growth. It's forming, it's starting to peak. So just be aware that the cycles are going from longer cycles to shorter cycles, and potentially the next one will fail to break that high. But having said that, this one did break to the high. We might be getting a head and shoulders pattern that forms here. So just trading that with that in mind, that really the safest place for you to aim, to be wary of, is to see if we break that high. If we break that high, then our next target is this high. So if, on the other hand, we're ultimately going to turn down, which of course I'm doing a midweek market focus next month, we'll have a look and see where the market ultimately does and see what it does. This is a weekly chart, so we've got a while. We should have some room to run on this. So the point is that most of the charts are looking as though they want to head upwards. Let's have a look at the Russell 2000. And so, yeah, we've got something happening. We've got a bit of volatility entering in here, but on the whole, this is looking relatively healthy. We're still producing an uptrend. We've just come up and collided against this. We've pulled back, but we haven't broken the previous low, and it now looks as though we're reversing. So in general, the markets are looking kind of as though they're topping out, but they're still bullish. So there's still a bit of room, but it is introducing volatility. So I want you to just be aware of that. We are finding a lot more volatility. However, if the FTSE manages to break out beyond this high and this trend line, it's going to take a run for it, because this has been holding it back for a very long time. Okay, so we'll just be aware of that. Let's go and have a look at the dollar index. Okay, so the dollar index, this is a really interesting thing. It's producing what appears, there's a bit of a delay here for me. We get a one-day delay on this, and we'll have a look at that. We are producing high lows, high highs. We have pulled back. This is a bit of a warning sign, the fact that we pulled back as far as we did. We shouldn't have done that. It implies we are either about to enter a ranging period, or we are about to reverse and change trend. Excuse me, I stepped away from my machine there. Okay, so yeah, so the fact that we pulled back here is a bit of an alarm bell. So we're either about to enter a ranging period, and that's what's happening a lot with the charts today. I'll demonstrate this with a few that we'll have a look at. We're not producing cycles anymore. We're starting to kind of trend upwards, but we're producing very long pullbacks, which is kind of like a hybrid between a range and a trend. We'll have a look at that. So yeah, we might potentially have a head and shoulders forming here. We'll be watching that. This is the dollar. We're expecting, my personal preference is to see this go down and break to the downside. And we'll talk about how that impacts the euro, but essentially, for those of you who are new, the dollar index is a collection of currencies, a basket of currencies against the US dollar. And so this gives me an indication of how the dollar is performing across the board and what that's going to do to the euro and to cable and sterling, cable or sterling, and a couple of the other currencies. So the other thing is we appear to have had a bit of a turnaround here on the week, so this implies that we have a shift in the up move. We have a shift potentially coming down, so that's going to be interesting as to whether that's just a temporary pullback and it goes on. We'll keep monitoring that. If we then look on a daily basis, you'll see that we were doing something a bit funny here. We've kind of broken up above that. So we were kind of sitting in amongst this sort of a range kind of down here, acting a bit funny. We seem to have broken out above that, and the question is now what's going to happen if it's going to pull back and then obviously continue upwards. We'll see what that does. If we then jump across to, because what this implies is if this is going to continue, the euro will continue to weaken because that's the second largest traded currency, and a few others will follow suit. But let's have a look at the euro. We're going to kind of read into this what's going to happen here. So on the daily here, let me go to the weekly and put this in context. So in the weekly, most people are bearish on the euro. I mean, let's call a spade a spade. Most people are bearish on the euro, but a lot of people have failed to realize that a lot of Americans who have more money are bearish on the US dollar. So we have a number of different things. It's a lot of conflict going on at the moment, which is making it a bit volatile for traders. We're going to talk about how we can overcome that volatility and make money. But yeah, so we have what appears to be a downtrend here. Most people are refusing to acknowledge that this is a lower high, but in actual fact it kind of is. They're just saying it's so small it's insignificant, but the fact is that the euro bounced, came up here, broke the previous high, and then for over 1 week, over the subsequent 1, 2, 3, 4, 5, 6, 7 weeks, failed to break outside of this bar. So it ranged largely in here, which means the euro itself is unwilling to give back a lot of that ground. And it has pulled back to a key level, right there, to the previous level, and is bouncing. So currently the euro is not looking particularly weak. The real question is, will it pull back further before it goes long? In general, I am anticipating that the euro will climb, and I'll show you why. I'm anticipating that as part of the larger cycle, we will work our way up. The real trick is in trading this correctly. And so I am anticipating that we will look to see this done, but I'm not, we're just going to see. We have to identify it. We need to be able to trade what we see. The reasoning behind it will subsequently become clear. We will hear good news reports that will then validate it. But until then, we just obviously want to identify. We were at this point in an uptrend on the daily. Price came down. It then failed to produce a new high, pulled back, failed to produce a new low, which actually is an indicative of about to enter a range. So it didn't produce a new high, then it didn't produce a new low, couldn't decide which way it was going to go, and that was actually our ranging period. Now what's happened is we've broken out of that and come back to do what appears to be a classic retest of this. Now please, there's one thing I do want you to understand, is that the market attracts traders with different beliefs and different entries and different amounts of money, and so that's what adds that element of unpredictability to the market, is that this particular setup as a standard kind of a break of support, a retest of resistance, will introduce sellers. It will attract people to sell at this point because that's what will drive it down. But what I do find interesting, and that's why we had a bar that kind of moved and another bar that came down this morning. This was a full bloated red bar at 7 o'clock this morning. And now it's like low testing. So what's going on right now is we can see that the classic setup has actually triggered, and yet the market is not really ready for that. And so if you were triggered in, it's possible people had an entry underneath this and were triggered below. They've now sweating a little bit because now the market is not really confirming that the market's actually as bearish as you expect it to be. But look, you look here, you've got lower highs, lower lows. So, this is another thing, right? Is you're kind of going, well, I don't understand if I'm analyzing the chart correctly because I enter and then I get stopped out. Well, there's a couple of things you need to be aware of. You need to be aware that the market is more volatile than normal. It is doing not completely unpredictable things. I'm going to talk about a few things that it's doing. We're still trading. We're still making money. It's just that the conditions are changing more often than they normally do, and that's what's making it so tough for us. So we kind of got these cycles coming down. This right now is indicating that it actually is potentially looking to kind of go long. So if you're not in this yet, the smartest thing that I recommend you do is to wait and see what happens. If the chart then does reverse tomorrow and tomorrow and Friday continues down, then I would say we're on our way down. And we'll watch what it does when it gets to this level. The reason I'm nervous is because of this ranging behavior here. I don't consider us clear of that range just yet. What should have happened was we should have just broken away, far away from it. Actually, all that it appears to be happening, we appear to be ranging now on a different level. So on the other hand, if we find that price now breaks back up above this level, what you've actually got again is another contradiction, because now it's broken into this channel, decided to climb back up into this channel, doesn't know what it wants to do. So be aware of that. But again, if that happens, I will look for a break and a pullback, and if I get a low test or something here, I'll be looking to take it long. Now remember that your income generators, similar to your power pivots in stocks, are calculated and predicted in your pullbacks. So just be aware of that. The other thing that's very much a condition of the market today is volatility like this. So one of the reasons we have a wider stop on a lot of our trading is to wait out this period, and then we get a single bar that will often take us out of all the noise, and that's when we start going into profits. So that requires a bit of patience, and I can completely understand if you find that frustrating. I can completely empathize with that. Okay, so let's have a look at this. So the euro itself is in a very interesting thing because we do see lower highs and lower lows. We are currently reaching a point of testing that resistance. And so consequently, we may find legitimately that this heads downwards into a downtrend. What worries me is the particular price behavior here. It's refusing to go down. It looks like it actually wants to go up. So I'm not actually in any trades at the moment. I'm waiting to see I'm waiting for clarification. I'm quite happy to do that. I'll show you the trades I am in. So we jump across and look at cable. Cable's on a very similar thing. Notice how they went into clear cycles here, then it started to produce the cycle, then it started to go a bit funny, sort of came all the way back up here, then it came back down and broke to a new low, so a bit of ranging funny behavior there, and then it's come back up now, so it's almost also acting a bit funny. It's bouncing off the 20. So in a way, this is also showing a possibility. It sounds odd. It's showing a possibility that what's actually happening on a longer term time frame is potentially the opportunity to do this. So just it's not so much I'm trying to convince you of it. I just want to put an idea in your head so that if the behavior goes up, you have some awareness of the bigger picture and how it's going. So I'm really just watching it to see it do that. And for me, the confirmation that we're in an uptrend is when I see this happen. When I see price head up, price pulls back, price then heads up to a new high. Then I have a low, a high, low, high, high. That's when we're in an uptrend. And when you take that in the context of the bigger picture, then that tells me we're probably going to head up to this level. And I'll just watch what happens. We have a look at the Swissy. Now the Swissy, remember guys, if you're new to the game, you get a bit confused sometimes between yen and Swissy. Which way do I buy or sell? So a lot of people get confused. They don't know whether they should be buying or selling. They overthink it. It's very simple. The way that your broker works, your broker is linked to the chart. So we have a universal agreement here that if we want to sell the Swissy here, we go short, we go down. Okay, it's very simple. If you want to go down in the chart, you sell, you go short. Don't overthink it. In every single chart you are on, you sell, you go short, you go down. Okay, if you want to buy, you go long, you go up. Very simple. Don't overthink it. Doesn't matter which currency you're doing, that's how you trade it. Okay, so I know people have got stuck. They've gone and they said, well, it's a Swissy, and the Swissy, I think it's swapped around, so I want to buy, so I'm buying Swissy, and don't worry about it. Just say up or down, and that's what you do. All right, so hopefully that will simplify matters for you and make your life a lot less stressful, because there's enough stress as it is anyway. So this is now interesting because we were producing lower highs, lower lows. Then we produced a higher low. Then we came up here. We did something really funny, came back down again, and there's no set trend. Now it appears as though we are producing a low, a high, low, a high, high. It's exactly the same as the inverse version of the cable that we saw in sterling and euro, where we saw that it's broken through. It now appears to be testing this. So right now is a very dangerous time. Not a dangerous time in general, but a dangerous time currently because the markets are not clear about which way they want to go. And in areas like this, which should be so straightforward, it should simply be a breakout, a retest of support, it should go long. It's now battling it out. It shouldn't be, but it is. And that just adds to the general market confusion. So here we get to the darling of the chart at the moment. Yen, the yen, the Japanese have been trying to weaken their currency. They're an export country. They've been trying to weaken their currency to improve their exports, and so they are looking for a way to weaken their currency. Remember that if we want to buy yen, if I said to you go buy yen, go long on yen, I want you to go up in the chart. Don't worry about the fact that actually what you're doing is selling the yen. Don't worry about that. The fact is the direction is key here. So we want to go up, so we buy or we go long. If we want to sell the yen, we go short. Obviously, you're not actually selling the yen, you're selling the dollar. But my point is I want to simplify matters here. Okay, so you want to go up in the chart, you buy. Don't overthink it. Down on the chart, you sell. Doesn't matter what the currency pair is. I don't think I can make that any clearer. So the point is, we have a lot of cycles. Now, the way that the yen works at the moment is not so much a nice, beautiful trend. What it tends to be doing is it tends to get stuck in a channel under here, and then boom, when it breaks free, it goes. And I mean, it goes. So we've been watching this for a while. Julio, one of the coaches on the floor, is a big fan of the yen. He's been trading most of the breakouts. He's been doing really, really well on that stuff. So obviously, if he's your coach, you'll be familiar with all of the stuff. You've been watching it. So there's a lot of those really good opportunities there, and I've just highlighted potential areas of support and resistance that I'm going to encounter. If you're not sure how far this can actually run, we've clearly sliced through this level here. So chances are, if we close above it today, at the end of the day, chances are we're going to take a run up to the next level. And what I've done is I've erred on the side of caution. I've brought it down. I'm not just assuming it's going to go up to here. I'm bringing it down to roughly where price was kind of struggling in the past. And if you really get stuck, you go to the weekly chart. So we go comma W and enter, and you'll see that we look at the history of it. We encounter resistance at those areas over there. So this erring on the side of caution with the way the market is, we will obviously expect that it will slowly but surely work its way up to that level. I'm not going to assume it's going to go straight out the gates and go straight there. I'm going to give it enough time in its cycles. I can see, look, it's been going practically straight up. So at some point, it might have to pull back and test a level of support and then continue. But I believe that we have opportunities to trade this at least up to there. Then we can reassess what's going to happen next. Aussie dollar. This is an interesting one where you can't really trade this just yet. Look at the personality of it. If we go and look on a weekly time frame, you'll see that I'm going to remove these moving averages just to unclutter the chart. Obviously, keep it a clean chart. You can see that historically, this has a preference for going up. Historically, it has a preference for going up, and you can see that actually over a longer period of time, it's ping-ponging just generally between those levels. So my expectation normally is to have this run up to the top there, and then come back down. But you can see that right now it's not really doing that. You'll also see in the past that we ranged in almost like a sub-range, a mini-range. We currently have a mini-range happening here. We've really got a lot of indecision. We go back down to the daily, and you'll see that the personality of this is quite interesting. Very strong, aggressive moves up there. Strong, solid green bars. Strong, solid green bars. But right now, we don't have that. So whatever was going on here in the up moves is non-existent right now. So this tells me this is basically just doesn't know what it wants to do. Comes back down, does a low test, turns around, quits, completely gives up, turns around, reverses. You can't trade this. It's untradeable right now. We need clarity. Clarity means break up above here, come back, retest, find support there, go up to there. That's good. That's a good sign that we're back into whatever else it is. But right now, it's a mess. Okay, look at Kiwi. We've got a similar kind of thing happening. Technically, we're shifting to the downside, but it's all a mess. It's all ranging. But if you look, you can see Kiwi was still more aggressive, still heading up in general over a longer, slower period of time. Okay, so even though it's currently waffling, we've still been climbing. We're still performing higher. So I'm inclined to think that this is just ultimately going to work and then break its way up to the upside, but I don't know when. That could be a month from now, 3 months from now, no idea. So yeah, so we're then looking at CAD. Now this is a very interesting one. We have CAD coming to parity. Now parity is when $1 US equals $1 Canadian dollar. So psychologically, it's a very big thing, and so it's battling here now because of the history of this. Because we went from up here to down here, and then to a lower high, slightly lower high, and then down to a brand new low. The thinking should be to take it short. Because of the direction, it leans to the downside. But what you can see when you look at it on close inspection is it's quite aggressive and climbing up. So what we're doing is this. It's a tough one to trade because, and right now it's stuck between that high and that low. So there's no real clear signal. So my advice for trading CAD is to either wait for it to come down here to break this trend line, to break this, and then look for an opportunity to trade it short, or if it breaks up, you need it to break free of this whole mess and to commit to a direction. There's no direction committed to right now. And then commit and then wait for a pullback and take it long. And if that's the case, you're good. You're good to go. Because this is a key swiveling point at which it's kind of stuck. And so, okay, so I'm gonna, I can't go forever. So I'm gonna jump through a couple of the yen pairs where we have a lot of good trading opportunities at the moment. What I want you to notice that across the board, a lot of the yen pairs are trending upwards. They were going sideways. They've broken up. Okay, so we're gonna look at cable yen, sterling yen. Look at this, beautiful, trending, broken up. Now I know a lot of you are going, damn, I missed that trade. That's okay. The trades will come. Focus on getting your swing right, and then it'll work out. The main thing is this one has already done a significant amount of a move, and it may continue for the next 2 days, but it's going to potentially hit resistance here and potentially hit resistance there. At some point, it is going to have to pull back. It has to. We've all been trading here long enough to know that it has to pull back, and when it pulls back, we are looking for opportunities to go long. So don't get overly excited. Don't blow your load. Don't jump into this thing too soon. Just basically wait for it to pull back and give you an opportunity to go long. Keep an eye on these support levels. If it pulls back, it's going to pull back to either this level or back down to this level, and look for an opportunity to take it long. All right. Look at Aussie yen. Aussie yen was the lagger. This was the beauty. My delegates we were talking about this months ago. We knew that of the bunch, this one was the one that was stuck. It's finally broken free, and it's gone. Okay, it's on its way. We're looking at Kiwi yen. This one was a lot clearer. This one was trending upwards, and this one has broken to the upside now. So this has got a good run up to there. So we've got opportunities. If you trade intraday, if you're trading snipers, if you're trading pivots, you got a bit of a clue as to which way it's going to go. So you should be looking to trade this long until such time as that ultimately we know that it's done a move. At some point it's going to pull back. So obviously you know that you've got a limited amount of time that you can trade it long on your intraday stuff. You've missed your end of day opportunities. Don't worry about that. They will come. We'll wait for a pullback, then we'll take it, and then we'll take it long. Okay, Swiss yen. Look at this, guys. There's a clear pattern here. Don't worry if you feel you've missed these. It's broken through this level. At some point it's going to pull back. We'll take it. Okay. So, yeah, at some point we'll see that. CAD yen. Boom, broken up. I know that it's climbing. We're all doing really, really well at this kind of stuff. But this kind of stuff will happen much more often. I promise you. End of day trading is also a really good place to be. If you're focusing purely on intraday trading and you're struggling, you really need to take a revisit to end of day trading. Starting about 9 o'clock at night, up until 12, any time between there, you can look at the charts and place your orders. You're getting 2 or 3 setups a week. Some weeks are better than other weeks. Some trade setups are better than other trade setups, but over the entire month, because it's a long-term approach. Remember, wealthy people think long-term. You know the generation today has no concept of saving for a rainy day. It doesn't exist. So the older generation, anyone in their 30s and older, grew up in the 70s or before that, understands save for a rainy day. We're thinking long-term here, guys. Everything you do now is training to get you to a point where you're more consistent. Let's have a look at a few others. We've got gold and silver. Looking particularly interesting at going long. Why? Because of the behavior of the U-turn that we had in recent price action. Behavior came up, broke the previous high, is pulling back now. So we've gone from lower highs and lower lows to a brand new high to a higher low, and now it's busy trying to just get to this level to break up. This is quite significant, and that's gold. Silver has already committed to that. Silver has already done the U-turn, broken this previous high, pulled back and broken to new high. It's hitting this level. So the implication is gold is looking to go long. Don't get suckered on it. I know people love gold. I know we all love gold, and we think, oh, we hear everything in the news. Gold can only go up. Do not get suckered by that. You cannot trade it if you don't see it. Right now, it is hitting its all-time highs. Once it breaks past here, it's going to hit all-time highs up here and up here and then up here. And as it goes to its all-time highs, it will get more volatile. As it gets more volatile, you'll be buying and losing. Do not do that. Trade it sensibly. Trade small trades, risk-reward setups, take the money. The beauty is you can take it again and again and again. So we have all of that. Let's have a quick look at oil. Oil is a mess, doesn't know what it wants to do. It's trending down, it's messy, it has no idea what's going on. It's tied to the Canadian dollar, not knowing what it wants to do. That's part of the trouble. And, of course, the US dollar. Okay, we've got a few others. We had some really good trades. We had Apple. Apple pulled back. We had a nice low test there. It gapped up, so I took profit here. I got stopped out here. So we've got a few of these other things. You guys need to spend time with your coaches. They need to draw your attention. Hold on a second. So spend time with your coaches, guys. Get in. You can spend coaching with there's all these amazingly talented coaches here. They all have their strengths. Most of us trade profits. We all trade profitably, but most of us trade more currencies than stocks, different things like that. And you can spend time with any of us. So just, feel free to do that, and it's really worth your while. It's incredible. You need someone to check your swing, somebody there just to kind of maintain if there's anything you're doing that's sabotaging yourself. You'll see that I'm trading very unemotionally. It's because I have confidence in my technical analysis, and that's why I see lots of trade setups, and I know how to trade them, and I know where to take my profits and where to take my targets. So I'm going to leave that for where we are now, but generally across the board, we've got some really interesting things here. I want to pitch an idea at you just to mess with your head a little, but it's not in a bad way. What I want you to see is if we look at the weekly, this is Euro Aussie. If we look at the weekly, I want you to notice the speed at which this has started to change its angle. So that angle is starting to change. So there's a possibility that this is either going to go sideways now or start to reverse. The other thing I want you to notice is, we've come back up. This support level on Euro Aussie on the weekly chart bounced off that, cruised down, cruised up, came down, bounced, and has found support here. So this is easy for us to predict. We can identify these areas. Your coach should show you how to identify these areas. Now, my expectation is that if this continues up, we have a good run at this level. And if we break through this level, we will begin an uptrend. All right, and this is something, again, that we were looking at. I'm going to put it on the record here. So this is something we are expecting. My personal expectation is for Euro Aussie ultimately to break up. And it may not do it now. It may only happen in a year's time because we have a number of things. We might find the price comes down to this level, finds support, and then starts to work its way up. Or we may find that the reversal is actually happening here. And the sooner it happens, the more the implication is that it's bullish. So this is a very interesting. Now, let's go down and have a look at this on a lower time frame. We do have a downtrend on the daily. We have lower highs, lower lows. But this is where it gets tricky. Price comes down, hits this key level, bounces up, comes back down, and stalls. So in its downtrend, if it was so sure it wants to go down, why is it stalling? In fact, not only is it stalling, it's now turning around and starting to head up. If this breaks this high, we officially are in an uptrend. We have a low, a high, a higher low, a higher high. And I'm not saying to you it's going to boom up. I'm saying to you we have a general direction in which we wish to take trades. All right? So just an idea. The market currently is doing really funny things. It goes up for 2 days and pulls back. All right? It goes up for 2 or 3 days, pulls back. I want you guys to not be afraid to take profits. If you see a setup, be very conservative and be very aggressive about taking profits sooner rather than later. Protect your stop. Okay, so all of this, let's just jump across quickly, check Euro Kiwi. Euro Kiwi is now producing short cycles, look at that, but high lows, high highs. Up to this range. Let's see what happens. If it breaks out of this, it's going to head up. But the implication is, yes. Cable Aussie. Lower lows, starting to produce a low to a high, to a high low, to a high. What has it done? Today, it has broken the previous high. Okay, so this is implying long term. So if you're ready to short this, fine. I'm a little bit more cautious. I need to see more evidence. Here we go. We've been ranging on pound Kiwi. Let's see if it breaks up out of this. We've got some good potentials. But I am willing to take short trades. 2 days up, 2 days down, 3 days up, 3 days down. Be wary of this, guys. It's not you. The market is producing bizarre things. Okay. So let's just jump across to my next point. The concept of a stop loss and a profit. Okay, so the concept of a stop loss and a profit target is your stop loss is designed to protect your existing capital and to protect and to lose as little of your future trade capital as possible. So it's designed as a stopgap, something that protects what you currently have. So you need to respect that the stop and the way you manage your stop, what its purpose is. The purpose is to make sure that you don't get pushed backwards. You manage to stay where you are or shift a little bit backwards. You want to go 2 steps forward, 1 step back, or 3 steps forward, 1 step back. That's what you really want to do. So the stop loss alone is highly significant with regards to that. So when you enter a trade, what we often have is with our income generators or certain stocks, we might have a wider stop to overcome this noise. But once you find the market has moved, you need to think about the idea of tightening your stop. Why? Because the market is doing moves and pulling back and then stopping out. You need to think about the idea when you see a move that's significant enough, it moves you out of this noise, shift your stop closer. So you allow, practically speaking, intelligently, you allow common sense, you allow for the noise in the beginning, and then when it takes you into profit, you start tightening your stop. If you do that, you will bag more profits under the current market conditions. All right, guys? These market conditions will not always be like this, but in order to make profits under today's conditions, you need to use the chart to indicate to you how you need to be trading. That's a habit for your longer-term discretionary trading that I'm teaching you here. All right, next, we have a profit target. It is not enough that we protect what we have. We must make more. I'm going to repeat that. It's not enough that we must protect what we have. We must make more. The profit target is how you add to what you have. Your stop is how you protect what you have. Your profit target is how you add more to the kitty. So think about the idea of identifying these key support resistance levels. Get your coach to show you how to do that. Get to the idea where if price hits a level, you take some of your profit off or all of your profit off. You can ask your coaches how to show you how to do that. All right? So think about the idea of having a stop management system to prevent you from giving money back, but also the idea of taking money off. So you get triggered in here, you get noise here, you start tightening your stop, you trail your stop a little bit closer, 10, 20 pips behind instead of 100, and you start bringing it up, you'll get stopped out over here. But also, identifying a key level where price might turn around, you could take profits here. So you just make that extra little bit of a difference. Now, on a run like this, that's not so much. But on a run like this, getting triggered in on a trade here and getting stopped out just through your stop management over here, you basically made no money. But if you recognized that after a certain move away from your entry, 1% up, you took let's say you're 1% up in your trade, and you took half, so you have a rule. If I'm 1% up, I'm going to take 0.5% off the table, and then I'm going to manage my stop. You'll be so happy because you bank some money and you manage your stop. So treat both a target, a concept of placing a target where you take money off the table, and your stop management. Treat them with respect, because they work for you if you do that. The other thing is, do not just say, oh, well, it's a 1 to 3, it's just going to go there. The market doesn't work like that. The market basically is not doing that at the moment. So you're not getting 3% trades. You're getting 1% trades, 1.5%, 2% trades. So just treat it accordingly. Be sensible about it. Don't get greedy. Don't assume it's going to run up there. Be cautious. It's kind of like plan for the worst, hope for the best. All right. Next, longer-term opportunities. All right, longer-term opportunities, very briefly. I want you to understand that the markets are cycling. And if we go on a longer-term basis on my monthly chart, I'm sorry, I don't mean to jump through this quickly, but I need to produce this video and I need to do it, and I've obviously got coaching to do. So we have these longer-term cycles where the market, this is going back to the 90s. So the market goes up and it comes down, and it goes up and it comes down. And then it's on its way up now. It's very likely it's going to continue up to that previous high. But notice how it becomes more volatile as it nears the top. Where I'm going with this is you have a longer-term opportunity. All right, if we measure this from this low to the first part of this, if we then move that along and we try and line it up here, and there's no guarantee of sequential, that it's not going to be a twin. It's not going to match it, but it's an idea. If we then match that up, we line up with approximately July, August next year, where we begin to see the market top out if the market continues up. So this is a theory, this is an idea, but if we subsequently see the market climb, we have at least got a plan in mind. If stuff starts to act really funny next year, June, July, we will prepare for 6 months, probably 6 months, maybe more, of huge volatility, and then we will prepare to start to short the market. Why? Well, if you're owning stocks, you really want to consider getting out of those stocks, taking the cash, or changing your position to short on a lot of those stocks. You need to think about this, because your money was best invested here and is best taken out there. And you're being forewarned, I'm telling you now, so be prepared for that. I'm going to show you all the major indices around the world and show you how that's inevitable. If you don't think it's not market inevitable, it's investor inevitable. Wise investors are aware of these cycles, and they will start to take their money out of it, and subsequently that will cause the market to short. So you can either, if you can't beat them, join them. So there's an opportunity here to short a lot of the stocks, and an opportunity for you to then reinvest at the beginning. But here's the thing, right? This process can take 1.5 to 2 years. So don't just think, oh, I'm just going to sell, I'll make money. It doesn't work that way. This will be volatile in its own way on the way down. So you want to be trained and professional at that point, because it's not going to be as stable as this. It's going to be hugely volatile. And if you do it wrong, you'll lose money. But if you do it right, you will make a fortune. You will make your first fortune. You need to be thinking long-term here, guys and girls and ladies. Let's look at the Dow Jones. Okay, here we go. You can see potentially the cycle. We're coming near our all-time high, so that's something we want to be watching out for. So just be aware of that. We look at the S&P 500, and we have a similar thing. Here's my cycle. I actually did it before, and this is looking more like December next year. So the FTSE itself, June, July, is starting to trip up a little bit. The S&P and some of the others looking towards the end of the year and the beginning of 2014. And then they'll start their downside. It's not a crash. It's just a standard kind of, becomes overpriced, comes back down, people panic, so it moves down faster. But it's not a crash. It's a part of a natural cycle, guys. It's like a decompose, and then it builds up. And it always takes quicker to decompose, unless, of course, it's plastic or something like that. But you get the gist. NASDAQ in itself also going to have a cycle at some point, and the Russell 2000 also going to have a cycle, and is already currently sitting at the top. So the Russell might even be the first, possibly, if it doesn't do a new high. They might break to new highs, but I want you to be aware of the cyclicity of it. We're looking next year, towards the end, second half of next year, if it starts happening sooner, I'll put it in a midweek market focus, but otherwise we're looking towards the back end of next year to start getting ready to short stocks, to start making an absolute fortune. Whether you're a country trader, you need to be looking at stocks if it's a currency. I'm sorry if I'm speaking really quickly. I've had a few people say, can I speak slower? But I'm kind of having to wrap things up here. I'm sorry. On my next midweek market focus, I will speak slower. So that's something that we will have a look at. Okay, so just have it in the back of your mind. Don't call it a market crash. It's just a market cycle. It's perfectly standard. And don't panic. I mean, I understand the whole world is under stress right now, and so it seems suitable, but it's not completely. It's just not completely unpredictable. This kind of stuff will happen 20 years after that and 40 years after that. Okay, so there's that, and then basically, just the quote of the week being all good things end, all bad things end. The idea being that, as with everything else in life, eventually, they come to an end. And that's what I want you to bring to your trading. I want you to understand that a winning streak, obviously the goal is that you will, if you finally feel like you've started to find winning trades and you're bagging money, you think that's it, I never have to look back now. But you still, those down periods, those drawdown periods, they still reoccur, but they do less damage. And they do less damage. The faster you can correct yourself, the faster you go, oh, I think I'm hitting a drawdown period now. You manage yourself accordingly. So as with everything in life, it's about managing ourselves and our mood and our headspace and our positivity, our attitude is very, very important. We're the only people who can really manage ourselves. Other people are not responsible for us. They're not. Doesn't matter what you think, you're responsible for yourself. In fact, you can choose to be responsible for other people, but you are responsible for yourself at least, and to expect that from other people is unfair on them. So all good things end. Obviously, a good run can end, and don't think about it. Think about an uptrend or a downtrend. You can trade it either way. You just want to say, look, the good thing being anything in your life, ultimately at some point, you have to have a winter, you have to have a summer, and obviously you just want to prepare for the winter and prepare for the summer so that you can get the best out of both and you can minimize the worst. And that's really the message that I'm kind of going on about here. I'll get off my soapbox now. So I hope you've enjoyed this week's Midweek Market Focus. I have. I love it. I love what I do. I love the trading. And it's really just about improving stuff. It's like a sport. You just want to keep getting better and better and better. So you want to practice and you want discipline. And all of that just happens. As you start to make more money, you realize that it's worth your while to be disciplined. And so you maintain that discipline. And discipline is really about understanding that you can analyze and see good setups, and therefore you take those good setups and you understand that if you manage your stop and you take money, that ultimately things you'll work out. You'll retain much more money. And as you get better as a trader, you will make fewer mistakes and you will see more trades and you will manage those trades to profit a lot better. So it's a cumulative effect. It's a snowball effect. It's as with everything else in life. The more you practice, the better you get. I just want to get you to a point where you can identify good setups. After that, your journey actually begins. It begins because then you have to build experience. You have to take trades, win, lose, learn how to manage your stop, and build up from there. All right, guys. I hope you enjoyed this. Thank you very much. Don't forget to keep calm and carry on trading. All right. Have a good week. I look forward to chatting to you in the next Midweek Market Focus.